Where did you?
Marijuana stocks. Aurora Cannabis stock is correcting as expected. Marijuana stocks went from being one of the hottest sectors, by registering very impressive daily gains, to one of the coldest, as a correction has gripped this entire sector. The losses are substantial and they are beginning to add up. I have reason to believe that the larger correction is now in the works. I am focusing on Aurora Cannabis Inc. stock because, if you had been following my previous publications on this stock, the correction that has gripped the stock should come as no surprise, because it commenced right after my price objective of $10 minus $12 was met. I first laid out this price objective on November 7, 2017, in a report titled Aurora Cannabis Breaks Out, setting the stage for a move toward $10. This objective was created using a method of investment analysis called technical analysis. Technical analysis is based on the notion that historical price and volume data can be used to speculate on what the future may bring. Many may shun this style of investment analysis, but I can attest that, when it is applied correctly, the results are simply too good to dismiss. It is why I have spent the last 2 decades studying and applying this method. The $10 minus $12 price objective. The following Aurora Cannabis stock chart illustrates the price action from where I derived the $10-12.00 price objective. This stock chart has been annotated in order to highlight the wave structure responsible for creating constructive price action. Constructive price action consists of impulse waves and consolidation waves, which work in alternation to create and sustain a trend. The wave highlighted in green is an impulse wave, and these waves are advancing in nature. Impulse waves capture the stage in a bullish trend when the stock price stages a sustained move toward higher prices. Investors and traders alike aim to capture this wave. The wave highlighted in purple is a consolidation wave, and these waves are corrective in nature. Consolidation waves capture the stage in a bullish trend when the stock price refrains from advancing and makes a price correction instead. Price corrections are a necessary part of a bullish trend, because they serve to unwind any overbought conditions that were created in the preceding impulse wave. Consolidation waves restore health to a trend and, more importantly, they set up the impulse waves that investors and traders aspire to capture. On November 6, 2017, I outlined that, because the consolidation wave was complete, I expected an impulse wave to follow, and therefore, higher prices were likely. Since that date, Aurora Cannabis stock appreciated from $2.63 to a high of $11.83, tacking on 349.81% in 2 months' time. This performance number is a testament to the value that technical analysis can bring. The great thing about technical analysis and constructive price action is that, aside from just suggesting that higher prices were on the horizon, the wave structure can be used to create a price objective. There are 2 ways one can go about creating a price objective, a linear objective, or a log-based objective. Both methods are created using the premise that impulse waves separated by a consolidation wave tend to mirror each other in terms of length. The linear objective uses the actual length of the impulse wave in dollars, while the log-based objective uses its length in percentage terms. The linear objective was $3.80. And I outlined that I had the inclination to believe that the log-based objective of $10-12.00 was a more viable objective, given the market conditions. On January 3, 2018, a stock hit my price objective as it put in a high of $11.83. Since that date, a correction has gripped the Aurora Cannabis stock. Since this correction has begun, I have reason to believe that lower prices are on the horizon. A correction in progress. The following Aurora Cannabis stock chart illustrates why I believe lower prices are on the horizon. The indicator located in the lower panel of the stock chart is the Moving Average Convergence/Divergence indicator. MACD is a momentum indicator used to distinguish whether bullish or bearish momentum is influencing the price action in a stock. Bullish momentum creates a path geared toward higher prices, while bearish momentum creates a path geared toward lower prices. The MACD indicator is currently converging, and a bearish MACD cross is likely going to be generated in the coming days. This indication will suggest that bearish momentum is creating a path of least resistance geared toward lower prices. As a result, I would expect lower stock prices to prevail. The Fibonacci retracement numbers, which have been annotated on the Aurora Cannabis stock chart, are a technical tool used to gauge counter-trend price objectives. The theory behind this tool is that a stock will retrace approximately 50%-62% of its move before the predominant trend reasserts itself. As a result, I would not be surprised to see a stock find price support in the range of $5.80 and $7, which is highlighted by the blue box. What happens after these retracement levels are hit is dependent on the price action and indications that present themselves at that time. After reaching my price objective, Aurora Cannabis stock is correcting, and I have reason to believe that lower stock prices are on the horizon. This view of lower prices was generated using technical analysis, and I will maintain this view until there are indications suggesting that the correction has run its course. Top marijuana stocks: should you invest in medicinal or recreational marijuana stocks? With all the excitement that's building up over the coming marijuana legalization in several states across the US and nationwide in Canada, it's easy to get caught up in the hype surrounding the recreational marijuana business. But as we all know, in the stock market, hype doesn't always lead to a healthy payoff. In contrast to recreational marijuana stocks, medicinal marijuana stocks are less controversial, more accepted, and have a proven business model that's been operating for years. So for investors trying to pick a side in the medicinal marijuana stocks versus recreational marijuana stocks contest, does one have a clear advantage over the other? The answer, dear reader, is yes. Right now, the market is clearly favoring one type of marijuana stock over another. Recreational marijuana stocks are faring better compared to medicinal marijuana stocks in 2017, precisely because of the hype I mentioned earlier. With so much built-up anticipation due to the relaxation of marijuana laws across North America, what we're seeing is that marijuana stocks 2017 are decidedly favoring the recreational hype over the more stable, if less exciting medicinal business. Just look at some of the biggest names in the marijuana stock market on both sides of the divide. JW Pharmaceuticals plc and Insys Therapeutics Inc. are down big in 2017. Of course, neither exclusively deals in marijuana products, so there are other factors at work, but their weak performance in 2017 so far is enough to show that at the very least, medicinal marijuana stocks are not seeing the boost that the recreational market is experiencing. JWPH stock is down over 9% since the beginning of the year. NC stock has fared better, but still finds itself having a poor showing in 2017 with a net loss of 3.5%. These two companies are some of the more prominent operators in the medicinal marijuana stock space. As such, when the industry booms, you can expect these two companies to benefit. But they have yet to see really impressive gains from the marijuana boom. Or at least, yet to see and sustain impressive gains from the green tide. On the other hand, recreational marijuana stocks have been having a great run the past few weeks. While 2017 was a rough year to start, especially compared to the massive gold mine that was 2016 for marijuana stocks, some of the biggest companies in the industry have quietly had a solid year, or even a great one, depending on your expectations. Canopy Growth Corporation (ComMPV), one of the biggest players in the industry by market cap, has seen gains of over 17% since the beginning of the year. While those with the 2016 hangover might think that's a tad on the low side, the majority of investors with reasonable expectations should view 17% gains as a great year. While Canopy Growth does operate a medicinal marijuana business as well, most of the excitement around the stock is due to its prominence in the Canadian market, which will legalize marijuana in the summer of 2018. Another company that demonstrates recreational marijuana stocks outpacing their medicinal counterparts is Aphria Inc. (ComNPV). Aphria has gone from a hair over $5 this year to being worth $7.12 as of the writing of this article, making it not only one of the big marijuana winners in 2017, but also an enticing marijuana penny stock. Which is to say that recreational marijuana has sucked up all the oxygen in the room and put medicinal marijuana on a ventilator. At least for now. Recreational marijuana is the beneficiary of hype and hope, both of which are not unfounded, but both of which can be, at times, inflated. But the numbers look good, and we know that a billion-dollar industry is just around the corner, waiting to be opened up to its consumers. In that case, if you have to pick between medicinal marijuana stocks versus recreational marijuana stocks in 2017, you're better off going for recreational for the highest gains.